We still have to consider Nvidia a week from today. How do you see that?
I mean, it's huge, obviously. It's the most important stock in the world right now. So, if they laid an egg, it would be a major problem for the whole market. I don't think they will. I think they're going to surprise to the upside. If you look ahead at sort of what Wall Street is counting on a go-forward basis, it's almost like this explosion of AI revenue that they've seen over the last year and a half, is going to just sort of dry up. And I just don't think that's the case. Eric Schmidt gave a talk at Stanford recently. It was sort of leaked a few days ago, and they took it down off of YouTube because he made some critical comments about the work culture of Google. But embedded within that talk, one of his throwaway lines was, in talking to Sam Altman, they said that together they both believe that each of the hyperscalers, plus the OpenAIs of the world, we're probably going to have to spend something like $300 billion in Nvidia chips over the next few years, each. 300 billion each. So, Nvidia could basically only supply those hyperscalers, and their order book is going to be full for the next 4 years. It's a massive, staggering amount of money that's sitting in front of them. And, God love the Broadcoms and the AMDs of the world, but, the vast majority, like more than 95% of that revenue is going to go to Nvidia.
Well, I mean, how do you just talked about, obviously the money that Nvidia makes is the money that the hyperscalers are spending. So at what point do you look at what the hyperscalers are spending and say, you know what, it might be a little longer for the ROI or the return on invested capital side of the story than I think we're willing to admit? How should we look at that?
Well, I think that the Meta is showing now that they are making a lot of money from this, and that's why their stock is mid 500s right now. So I'm starting to think that Zuckerberg was sort of leading us on several years ago when he was saying that he was spending all this money on Reality Labs, and people panicked and sold the stock down to $80. I kind of think he was trying to throw off his competitors by just spending all this money on Nvidia GPUs so he could get a head start of them. So he's showing the way. Now, if you're sitting in the seat of Andy Jassy, or Microsoft or OpenAI, are you going to let, another one of these competitors just, take the lead and become the dominant, player in AI going forward? I just don't think you can do that. And you're only spending a minority in some cases, or just, certainly less than your annual free cash flow that these companies are generating. So you're not going to spend that money just like leaving it on the balance sheet, and you're not going to spend it on M&A because Lena Khan's not going to have anything to do with that. So, I think it was Eric Schmidt in that same talk that said, a lot of these people look at the investment in AI as like, what's the return on investment on intelligence? Like, they see it as, a lot of them, infinite. I mean, there are going to be some shocking applications that are going to come out over these next few years. I've seen some already that just make the hair stand on the back of my neck, Scott. So I know everybody's impatient to see the applications, but they are here in some cases, and they will be coming shortly. We're still less than 2 years away from ChatGPT's debut.
I got you.
Citi retained its bullish position on Nvidia Corporation, retaining its $150 price target and buy rating. The analyst for the company estimated that Nvidia's data center sales and total for the July quarter would be about $24.8 billion and $28.5 billion, respectively, in line with estimates. Although this amount is less than the $2 billion beat seen in the preceding 4 quarters, an upside of about $1 billion to the Street's projections is anticipated. This cautious assessment is explained by remarks made about the supply chain and worries about Blackwell GPU delays. Citi projects Nvidia's total sales for the October quarter to be $31.9 billion, marginally higher than the Street's projected $31.5 billion. Based on remarks from peers, the company estimates that potential sales might reach between $32 billion and $33 billion. Investor attention is anticipated to be focused on multiple important areas as Nvidia gets ready to release its earnings report following the market's closure on August 28. The ramifications of sovereign AI and the possibility of further restrictions on next-generation GPUs in China are among them, as is the demand for the H100 and A200 models in the second half of 2024, updates on networking supply delays, and the momentum of Ethernet Spectrum-X, enterprise demand in the context of rising AI agents, and the impact of probable Blackwell GPU delays on the January quarter and calendar year 2025. Citi believes that during the June and October quarters, the street's expectations would probably rise. Additionally, the company anticipates that remarks made regarding Blackwell will reassure investors about Nvidia's optimistic forecast for 2025. Citi projects that Nvidia's stock may hit a new 52-week high in response to these events. The analyst's analysis emphasizes that Nvidia's performance and possible market trajectory are expected to improve. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the markets. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Well, investors are clearly going to be on the lookout for earnings from Nvidia. The chip maker that has gotten the lion's share of the market attention this year is set to report results next week. That could provide some further clarity on all the AI demand that was consuming the market earlier this year. Nvidia shares have bounced off their lows, but certainly that theme, it's helped the likes of Microsoft and Meta and all these companies that are spending a lot on AI right now. But broadly speaking, we've started to see some cracks in the chip sector. The semiconductor index, the SOX that gets tracked very closely on Wall Street, has had a challenging time over the last month. Nick Mersch is an associate portfolio manager at Purpose Investments and joins us with a deeper dive into the technology sector. Nick, great to have you with us. What are you thinking about, first of all, on like a company like Nvidia? I would imagine there's going to be like 3 days of buildup, like a Taylor Swift concert or something like that next week. But what's your general sense on that company as it pertains to this whole AI spending boom right now?
Yeah, absolutely. And I think you kind of hit the nail on the head in terms of Jensen Huang kind of has a lineup similar to a Taylor Swift concert when it comes to sort of the hype around this stock. And I think if you look at the market right now, and if you want to pick one stock that is the market right now, Nvidia is the #1 most monetizable company in the hottest area of the market. And there's two really important things to watch for Nvidia. So the first is the revenue forecast going forward, because a lot of the implied valuation really does bake in the future growth expectations of this company. And I think what the market mostly missed here was an article that came out from The Information. And this article had indicated that the Blackwell series, which is NVIDIA's next set of chips, could be potentially delayed. And this article was published on the Friday night on the same weekend that the carry trade unwind happened. So I think it got a little bit lost in the market. So if this delay does make NVIDIA change their forecast, the entire market, I think, is going to really receive this negatively. However, we did get a lot of notes out that this delay is only 6 to 8 weeks instead of quarters, and the order book is incredibly strong. And that NVIDIA can really backstop any of the delays in this Blackwell series with their current run, the Hopper series. The second thing to watch for when it comes to NVIDIA is the margin profile. So while this stock price really has skyrocketed, I think even after this sort of recent sell-off, it's rallied about 25% over a 6-day period here. Each time they print earnings, they keep getting cheaper because they keep pushing the goalposts out in terms of just how much profit they print. So these are software margins at a hardware company, and we've seen this in this market before, and this company is Apple, and they've done pretty well. So what the margin profile really indicates is just how much pricing power NVIDIA has. So AMD announced a server-level acquisition either yesterday or the day before to really try to capture more of the stack, but they are far and away a very distant second, and NVIDIA is the one-stop shop for all AI components. But any erosion in the margin profile could mean that either competitors are taking share or that incumbents are finally getting good at building their own silicon, which we're starting to see signs of. Despite these areas of caution, for now anyway, NVIDIA is a dominant force in my opinion, and could be the first $5 trillion company if this CapEx cycle still has another 2 to 3 years of build out, which I do believe it has.
An HSBC analyst revised their forecast for Nvidia stock, raising the price objective from $135 to $145, while keeping the stock at a buy grade. The modification takes into account the analyst's projections for Nvidia's future product line and financial performance. The company believes that in the second half of 2024, Nvidia will concentrate more on the Hopper H200 series and less on its Blackwell B100/P200 GPUs. Furthermore, in the fiscal year 2025, Nvidia is expected by HSBC to reallocate more capacity to its advanced packaging CoWoS chips. For the fiscal years 2025 and 2026, the analyst does not see a significant danger to Nvidia's earnings, despite a modest delay in the next-generation GB200s. Based on expert projections, Nvidia is expected to generate revenue of $30.0 billion in the second quarter of 2025, which is more than management and consensus estimates. This is expected to beat sales expectations. Similar to this, sales are predicted to surpass consensus estimates in the third and fourth quarters of 2025, coming in at $33.0 billion and $36.0 billion, respectively. Any possible losses from the B100 and GB200 products should be offset by the revenue from the H200 and H20 chips in the second half of 2024. As a result, HSBC raised its projection for data center sales in the fiscal year 2025 by 8% to $110 billion, which is 4% more than the $105.6 billion consensus. Regarding the GB200 certification and its projected production ramp-up by April 2025, the next major update is scheduled in October. SBC continues to forecast a significant increase in data center revenue for the fiscal year 2026, with a projected total of $178.6 billion, representing a 62% year-over-year growth and 14% over the consensus estimate of $156.3 billion. SBC thinks that growth will be supported by the underlying trend of AI hyperscaler capital expenditure and AI demand, even though market expectations are high. In light of the possible gains from the H200 and H20 chips, the company increased its earnings per share (EPS) projection for fiscal year 2025 by 8%. Fiscal year 2026 estimates were essentially left untouched. Based on an estimated $4.51 EPS for the fiscal year 2026 and a target price-to-earnings (PE) ratio of 32 times, which is somewhat below the 5-year historical average, the revised price target of $145 was set. SBC maintains its buy recommendation, noting that there is a 14% upside to the current target price and that any delays in the product roadmap will not significantly affect earnings because to the sustained strength in demand for AI GPUs. In other recent developments, big financial institutions are still taking notice of Nvidia's financial performance. Given the company's steady profitability and strong demand for its Hopper and Blackwell solutions, Deutsche Bank kept its hold rating on Nvidia. The bank added that Nvidia's financial picture is stable in spite of probable delays in the Blackwell platform. Goldman Sachs and Stifel, meanwhile, have both maintained their buy ratings on Nvidia's stock and voiced optimism about the company's future. Simultaneously, Advanced Micro Devices declared its intention to pay $4.9 billion to purchase DT Systems, a manufacturer of servers. It is anticipated that this calculated move will improve AMD's hardware and artificial intelligence chip offerings, giving it a stronger competitive edge over Nvidia. It is projected that the acquisition will be completed in the first quarter of 2025. These advancements are in line with current technological trends, which emphasize rapid computing and artificial intelligence in particular. It is imperative that investors stay up to date on these latest advancements as they maneuver through the ever-changing technological industry. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Take a look at Nvidia, up almost 30% since August 5th as part of a larger tech rally that's brought the S&P 500 index up over 7% in that same time frame. Taking a look at Nvidia shares right now, up nearly 0.7%. The big question, was the summer's brief pullback a blip, or was it a sign of something further in terms of weakness for the tech sector? Our very own Josh Schaefer joining us here with more. Josh, such a boring morning. Thank God we have you here to talk NVIDIA with us. Something finally to cover.
I've been refreshing the Bureau of Labor Statistics page for 30 minutes, Maddie.
I know.
A lot of fun waiting for those
a
lot of fun waiting for those job revisions. But yes,
NVIDIA, yes,
over the last couple days, I've been asking strategists about the rally that we've seen in tech and the rally that we've seen in NVIDIA, and if that is supposed to be worrisome again, right? We've had a lot of conversations over the past year about, well, this rally is only happening in tech. It's 7 stocks leading the stock market higher. That's not a reason to be bullish. That's not a reason to be positive on the current rally. But what strategists are pointing out is that it's more than just tech that has been rallying. Yes, tech has led us from that August 5th bottom, but if you go back over the last month, a lot of stocks have been doing quite well. So our friend Kevin Gordon over at Charles Schwab highlighted a chart to me showing that about 58% of companies in the S&P 500 have been outperforming the index over the last rolling 2 months. This is the highest level that we've seen in the last 2 years. So you can see that big tick up that you see at the end of your screen on that chart. That was the amount of companies outperforming the S&P ticking up over that last month. Another interesting chart that our friend Brian Belsky over at BMO Capital Markets highlighted that was interesting to see is for the first time in about 2 years, you're looking at the rest of the index, not the Magnificent Seven, not the Nvidias, Alphabets, Apples of the world, actually outperforming the Mag 7 this quarter thus far. Largely what this tells strategists is this is a healthy bull market. This is what you want to see confidence that stocks are going to continue to chug higher. Largely, people are pointing to the fact that we still have solid economic growth. Yes, we're talking about those BLS revisions today, but still, I think as economists just said to you, we're looking at potentially a soft landing scenario here that would help cyclical areas of the market, markets outside of tech. So largely, the rally we've had, yes, we've talked a lot about tech, but other areas of the market also.
Investors in Nvidia stock experienced a wild ride before to the company's Q2 earnings announcement in August. On August 5, the price of its shares fell below $100. However, it soon recovered and increased for 6 days in a row, from August 12 to August 19. On August 21, Nvidia was trading at roughly $128. A possible chip delivery delay brought on by a design issue in the Blackwell architecture and the instability in the global markets following the yen-carry trade were 2 factors contributing to Nvidia's early month decline. With an 80% market share in AI processors, the chip giant continues to rule the AI sector. Rivals like as AMD, however, are accelerating. In an effort to increase GPU sales, AMD announced on August 19 that it will acquire ZT Systems for $5 billion. The following trading day saw a 2% decline in Nvidia shares. GPUs are specialized technology designed to execute matrix calculations needed for artificial intelligence processing. On August 28, Nvidia will release its fiscal Q2 earnings. Regardless of the outcome, it will serve as a crucial indicator for artificial intelligence and the semiconductor sector. For estimating earnings and projecting future changes in the stock price, the earnings reports of its rival chip manufacturers can be a useful resource. On July 30, AMD, the second largest participant in the industry, released impressive Q2 earnings that surpassed analysts' projections for both revenue and profitability. Earnings per share jumped by 19% to 69 cents, while revenue increased by 9% to $5.84 billion. Also, it anticipates strong demand for AI. However, Intel's earnings miss caused a drop. In contrast to its $1.48 billion net income the previous year, the corporation announced a $1.61 billion financial loss on August 1. Additionally, revenue and earnings fell short of analysts' projections. According to CEO Pat Gelsinger, Intel attributed the loss on a decision to build Core Ultra PC chips that can perform AI workloads more quickly. For the fiscal Q1 2025, Nvidia reported record quarterly sales of $26.0 billion, up 18% from the Q4 and 262% from the previous year. The AI behemoth projects $28 billion in revenue for the second quarter of FY25, with GAAP and non-GAAP gross margins estimated at 74.8% and 75.5%, respectively. By contrast, Q2 FY24 reported $13.51 billion in revenue, with gross margins of 71.2% and 70.1% according to GAAP and non-GAAP. The next industrial revolution has begun. According to CEO Jensen Huang in the Q1 earnings release, businesses and nations are teaming up with NVDA to convert trillion-dollar traditional data centers to accelerated computing and construct a new kind of data center called AI factories in order to produce a new commodity, artificial intelligence. We're ready for the next phase of expansion. Analysts predict that Nvidia will continue to grow due to the underlying demand for AI GPUs, with any delays in the company's product roadmap having little effect on earnings.